All right, welcome in. This is the Thursday deep dive episode. We have Ian Gray on as usual. Ian's wearing the button-up shirt. He is at his internship. We don't need to disclose what company he's at, but he's making the big leap into the suit world, I guess.
He's a professional man. He's a suit man.
Yeah, business. I'm a business casual man.
There we go. There you go. Yeah, you're not joining the full the suit ranks, I guess, is the Wall Street bet. How the Wall Street bets people would describe it.
Is it basketball shorts on the bottom?
No, not basketball shorts, but jeans today.
There you go.
Okay.
There you go. There you go. All right. Well, we're going to be talking Ubiquiti, not networks, but I guess that's what some people called it. That's what I heard him call, but it's Ubiquiti Incorporated. I'll let Ryan introduce the company, but first, if you want to talk about our friends at 7 Investing, when this is coming out, it'll be very, very close to when the price hike, I guess that's how I'd call it, is going into effect in early July.
I'd call it flexing their pricing power.
Flexing their pricing power, yes, because the value is still very strong. I guess that's not the best way to put it. But yeah, I mean, if you want to get in while you can, I don't know, Ryan, you want to talk about
Yeah, we talk about them all the time. But I recently, last night was the first time I got the chance to look at the Rex from the most recent month. And I watched those videos. It's nice to
Great
get
addition.
that was a very helpful addition because you can kind of get the facial response from teammates and kind of you're getting a real presentation and sort of their verbal pitch, which is nice.
Mm-hmm. Yep. And then we should probably mention the code. So code CCM, use it at their checkout or whenever you're on the website and you get $10 off your first month, give you a little discount if you're going to try out the service. All right, Ryan, you want to introduce Ubiquiti?
Yeah, so if you're reading through the 10K, there are a ton of technical terms in here. So I'll try to make it as simple as I can. Just know that I don't understand all the terms either. Also, they don't do conference calls. So you really got to do a lot of digging into the 10K, stuff like YouTube videos to kind of get the gist of their offering. But they're basically selling equipment for internet distribution. So it's like Wi-Fi hardware, and they sell to enterprises primarily. Well, they don't actually sell directly to the enterprises, but they sell through a distribution network essentially. So it's service providers, resellers, distributors, stuff like that. And then they also sell related software to it. So think about if you've got, and they've sold devices in over 200 countries. So if you've got a bunch of different modems or routers in different places, you can manage that with the software, or the IT department can, as kind of the command center, to see like what's getting the most internet access, what has the best point, where are the best access points, stuff like that. You can kind of map it out with
security weakness, who's strong, who's got a strong Wi-Fi signal, stuff like that.
And there's several, and they also have other devices too. They have cameras, phone systems, and they have software for those offerings as well. And every software offering that they have, except for one, is, I think they're all like Unify Protect, Unify Enterprise. So it's always Unify. So if you see that, just know it's probably attributed to Ubiquiti. As far as other stuff, the actual business model, they aren't selling direct to consumer, I don't believe.
The 85% is reseller, 15% is direct sales.
Okay.
From the last number I saw.
And their largest operating expense is research and development. They don't spend a lot on sales and marketing since their sales department is essentially the community of resellers for them.
Yeah. So I think they actually mentioned that directly, that they don't have any direct sales team.
Yeah.
It helps them make a lean operating.
There's SG&A expense, but a lot of that's probably sort of back office stuff.
Yeah, it's very, very low as a percentage of revenue. If you check it out, surprisingly low for a company like this.
And then history about the business. This is actually pretty fascinating. So the company starts and stops with its founder, and the founder is Robert Pera. He owns, and Ian will probably touch on this, he owns 89.5% of all the common stock outstanding. So it really is you could say it's a one-man ship. I think he has a small team of directors.
Board of directors, only 4. Yeah.
Yeah. So he really runs this business. And he actually started his first company in high school providing networking and database services. So he sounds like he's been kind of like a tech savvy, smart guy for a long time. And he was really into basketball in high school. We'll get into why that's relevant. But after high school, he attended UC San Diego, where he mastered in electrical engineering and studied Japanese while he was there. Sounds like a great life. And then after college, he went and worked at Apple, but within 10 months, he left to start what is now Ubiquiti Networks, or Ubiquiti Incorporated. And he used $30,000 in personal savings and credit card debt in order to fund the launch. And he basically started the business by building his own low-cost, high-performance Wi-Fi module in his apartment. And then
Yeah,
he
it's
started
like
to sell.
you guys probably haven't watched it, but the show *Halt and Catch Fire*. It's basically the main character from that. But
Haven't seen it. No, but they IPO'd. They've obviously expanded their product suite since then, and they IPO'd in 2011. But he personally bought the Memphis Grizzlies in 2012, and so I believe he founded the company. I might be getting this wrong. When he was 25, he's 42 now.
yeah, he's still pretty young. Yeah.
Very young, and basically his entire net worth is the net worth of the company.
Yep. And Robert, if you're listening, let's move that team over to Seattle. Get that.
Yes.
To get the team. What are the valuation of the team will go up. So if you want your net worth to go up, let's get to talking.
You're going to become a season ticket holder to help him out.
Yes. We'll have to be. That's just a business expense. Everyone.
Chit Chat Money corporate sponsorships.
Yes, exactly.
Maybe
exactly.
a suite.
If he hears that, there's no way he's not coming. The climate change arena too with Bezos.
Okay,
that's
industry landscape. Let's.
Okay, I'll talk industry landscape competition. Biggest competitor is Cisco Systems. If you know Ubiquiti, when Ryan was describing the business, it's very similar to a lot of products Cisco sells. I was looking at the Gartner reviews, and Cisco's products overlap 55% with Ubiquiti, and it's really like all of Cisco's products, all the products Ubiquiti has, Cisco has a lot of those. And they're, the behemoth in the industry, one of the biggest and best performing stocks of all time. There'll be tough competition, but it shows that, and the reason I'm talking about Cisco is it shows how large of an industry this is. A lot of people don't think about it, but they're really building the backbone of the internet. Other competitors will include Netgear. That's someone that people probably recognize, at least from a consumer standpoint. There's D-Link, which tough name, if you think about it, tough name there. Then there's Dell, and then Juniper Networks. And then for reference, Cisco does about $50 billion in revenue a year. I would check out the Gartner reviews for B2B businesses like this. There's a ton of good stuff on that website to kind of check out the competitive landscape. I think that's it. Ian, do you want to talk management?
Yep, pretty simple today with Robert Paris. So he's the founder and CEO, chairman of the board. As Ryan was talking about, he formerly worked at Apple, has kind of an entrepreneurial past, owns 89.5% of the shares outstanding. So probably, I'm like 90% sure, maybe 89.5% sure that this is the highest insider ownership we've ever seen on a company we've done.
Yeah. Especially this size.
Size, right? It's, and you're going to get into this, but this is a $20 billion company. So a very, a large company, and he owns basically all of it. They haven't done any conference calls since 2018. They keep things pretty close to the vest, don't do a whole lot of press. Small board, as Ryan was talking about, 4 members, including Robert Paris. So only 3 others. And, as we were joking about earlier, he's the owner of the Memphis Grizzlies. So he used to be out and about a little more often, I think, and doing some more interviews. There wasn't as much recently on him, but they just kind of keep their head down and go to work and do their thing, I guess. Like, this is, there's not a whole lot of extra information on this company. He does not take a salary, which is a good thing to see with as much ownership as he has. He's not draining the company of cash, I see Ryan's
$3,000 in compensation.
Yes. $3,000 in compensation from using, it was not cash compensation he was given, but for using the company's jet. So
right. Okay. 3,000. Like, that's pretty low.
For 3,000, that's nothing. That's like going from Phoenix to Tucson or something. So,
or Memphis,
anyways, he's got
Memphis, New York,
Memphis to Seattle,
Memphis to Seattle. Maybe that flight may even be too long for $3,000 though, but who knows? Anyways, he, no real compensation, no governance issues really to speak of that are obvious. But it's just, you're trusting in Robert Paris if you're buying this company.
Yeah. And Ryan will get into it with earnings. They run a light ship. The spending there is just, it's bare bones, which it kind of works for them. I guess it's part of their culture. I'll hit valuation quick. Market cap $19.7 billion. Ticker is UI if you're interested in looking that up. Enterprise value is $20 billion. They have some debt, so this is probably the relevant metric, and it's pretty standard debt. I think it's just traditional bond. Actually, no, it's a term loan. You don't get into the details, but yeah, very standard stuff on there. EV to sales is, it's not 1.5. I believe it is 11.5. I wrote 1.5. I think it's 11.5. EV to gross profit is 24. EV to operating cash flow is 35. And they had some one-time working capital stuff the last few months that makes their operating cash flow look a little worse than what their operating income, I believe, would be. It was slightly higher. So that operating cash flow could grow quite a bit over the next few years if you average it out. EV to free cash flow, slightly higher. So they're minimal CapEx here, even though they are a hardware company for the most part. They outsource a lot of that manufacturing to different Asian countries. And no, they do a lot of it in the US too, I believe. So, operating cash flow is probably a good metric here to track the company's profitability and obviously the cash generation. And then lastly, they have minimal stock dilution on deck and then a strong buyback program. So share count, if anything, will be a boost to, returns if they continue to do well with this business. There's not going to be any worries about share count growing at like 4 to 5% per year.
No, I mean, what's his incentive to dilute? It's not like
true.
he has some tranche options package.
If anything, there's going to be no more shares to buy back. Eventually, this be him.
Yeah, this is maybe a topic for another show, but I question how he bought the Grizzlies. Or
it says it was in the 10K. He has 25% of his stock is collateral for loans, so that's why he did it. Yeah.
Okay.
Or how he did it.
So I'll get into earnings. The trailing 12-month revenue was $1.7 billion. That's up 38% year over year. The majority of that revenue comes from enterprise or the enterprise, but that's kind of a big category. They break it into two, but they obviously have a lot of different products. They serve a lot of different types of businesses, and then a lot of different areas as well. But gross margins were 48%. That's been expanding slowly. Like Brett said, it's a lean business, and I mean, it's been linear growth for like the last decade. It's quite impressive how sustainable it's been. But they had $555 million in free cash flow. That's up about 53% year over year, 32% free cash flow margins. So on 48% gross margins to have 32% free cash flow margins, pretty impressive.
This is what all SaaS investors, and we're SaaS investors, so don't get insulted here. This is like what everyone dreams of when it's like, 25 times sales, but 90% gross margins.
Yet a lot of it's hardware.
This is the exception, not the rule. And it's hardware. Yeah, it's impressive what these margins are at.
Yeah, and they are having some global supply issues with the shortage in chips. They made sure to mention that on the last earnings report. They have had to incur additional costs in order to expedite shipments, and they've also had an inability to meet some orders simply because they lack or they're unable to procure the supplies or components. And then they do have a dividend yield. I think it's 0.5%. I believe. If anyone saw something else, feel free to let me know.
But that's what I saw. Yeah.
They've increased that incrementally each year, I think, for the last few years. So they continue to raise that as well.
Yeah. All right, Ian, do you want to hit balance sheet to wrap things up?
Yep. They've got $144 million in cash, $670 million in debt. And as Brett alluded to earlier, the majority of that is a term loan. About $200 million is on a revolver, but both loans are at just under a 2% interest rate, about 1.9%. Both loans are also variable rate. And so if interest rates were to rise, that would impact the interest rate and impact the amount of interest they're having to pay each year, obviously. And so
that service,
with as much debt as they have, that does have an impact on the business. Part of the reason they have this debt, it appears, is so that they can continue to buy a lot of shares. Because we don't have conference calls, we can't get that exact. We can't ask those types of questions on a conference call, but they make some reference to that in their 10K that by having debt, they can buy back more shares when they feel their stock is cheap, and they can also issue dividends. And as Ryan was mentioning, the dividend has been increasing for multiple years in a row now. So pretty solid looking balance sheet. They do have debt, but they've got the business to support it for now.
Yeah, it seems like everything with this business is just set out like very meticulously. Like the debt isn't, most businesses you look at, they're like, oh, you got some random thing due in 2024, some random thing due in 2027. This is like, I forget what the exact numbers are, but it's like 30 million this year, 30 million next year, 30 million next year. So
The stability of the growth has been exceptional. And I'd also add that, I mean, they're generating 555 million in cash. That 670 million in debt isn't crazy. And
Yeah.
maybe it's super lean. And I think that might just be because it might just be the CEO's, I'm blanking on his name, Para, is that what it is?
yeah,
It might just be his habits. I mean, he started the business with 30,000 in personal savings. Maybe he's just a frugal person.
this reminds me, I just read Cable Cowboy. This reminds me of what they were describing TCI, and they were the biggest cable operator in the world. And John Malone just had him in some creaky little office building in Denver for a lot of the time. But Ian, you had something, I think. Do you want to add? No. All
No, you guys covered it. So
Okay, well, that's going to do it then for the first half. Let's take an ad break, and then we'll get back for the second half of the show. New format. Hopefully, it'll be fun. So don't leave us. All right, welcome back in. Next up, we're going to hit anecdotal evidence, but I think I should mention here, we're going to do a different format. We're taking out competitive advantages, rolling that into highlights and lowlights because we've understood it's gotten cliche. There's only so many companies with competitive advantages. So we're going to do anecdotal evidence, future growth opportunities, highlights and lowlights, and then we're going to close things out with bull case and bear case. So each of us are going to say, all right, what's going to happen for this stock to do well? What could happen for this stock to do bad? We'll explain it more when we get there. But first one is anecdotal evidence. Ian, any thoughts here? I know it's a B2B, so it's kind of tough.
not much. My only, and we'll get into this more later, I think, with some other discussions, but we actually at my house are having to replace our Wi-Fi system right now. And it's just always a pain, to have to like replay. You just want your internet to work. And so someone who can actually provide something that makes your internet work, I think is a valuable, it can be a valuable business, whether it's B2B or B2C, because everybody just at this day and age, everyone expects internet just to work, right? Just be.
Yeah. And if it works, you're not switching. That's the other part.
And that's kind of what Netgear is a smaller competitor, but a lot of people, at least maybe it's me, don't have a good perception of Netgear, kind of tacky products. Ubiquiti might be the opposite. They're like more sleek, work a lot better, stuff like that.
Yeah, I worked at basically one of these resellers. I don't think we used Ubiquiti. I don't think we sold Ubiquiti products, but there is something to be said here because they go through a distribution network like that where they have these resellers. There are times when certain resellers can favor certain suppliers just due to incentives. So that
like Cisco or something.
Yeah, like in our case, Aruba Networks, we had a really good partnership with them. I think there might be better. I wasn't really cued in since I was the intern on the details behind it, but they kind of push those products when they're talking to an end customer or an end business.
Yeah.
So that relationship with the resellers is important, and they tout that on the 10K that they have a big distribution network. So just worth paying attention to. And I'd also, as someone who had to make cold calls, people don't want to switch their Wi-Fi. If it works, they're going to stick with it.
It's going to be, there's going to be the lock in there. I'll hit mine. I mean, I got none personally. There's great reviews online. The Gartner stuff is a kind of a resource I found that's been really, I think, helpful for these type of B2B businesses. Sleek looking products though. I think if I was going to buy something for a small business, if say we had a little office space, we'd probably look at them. They seem a lot cheaper than the other options out there. So I guess that's kind of a good point, but it's tough. It's tough to know until you get into like the IT department, who's best and whatnot.
I think also, I mean, they have an expansive product suite with the camera network and the camera software and then the phone systems, that kind of thing. So if you've had success with Wi-Fi products or their modems, routers, that kind of thing, it probably incentivizes you to use the rest of their items as well if you're looking for them.
Definitely. All right. We got future growth opportunities. Ian, what do you have for Ubiquiti?
Ryan's last point leads perfectly into it because I think a great future growth opportunity for this company is to continue to push into more and more connected devices. They sell security cameras, door locking systems, things like that for enterprise customers. So for businesses to monitor their warehouses and workstations and keep track of who's coming in and out, as well as all the Wi-Fi. I think there's going to be a secular trend towards more Internet of Things. And I know we've been hearing that for like 10 years plus, but I think the Internet of Things is going to be real at some point. And it's going to require, like, Ubiquiti can benefit on two fronts. One, from actually selling some of those Internet of Things products, some of these connected devices that they're selling today, but also as there's more and more of those products into the market, people are going to need faster and faster Wi-Fi, and presumably some of the equipment that's out there today is going to become outdated. And I know you're going to get into this a little bit, Brett, but there should be some opportunity to upsell people on new Wi-Fi devices as well.
Now, I just thought of this too. This plays into that, the infrastructure bill. That's a tough way to form an investment thesis, because you don't want to flip a coin on whether the Congress and the president make a decision on that this year or something like that. But that would probably benefit them as well. There's probably a lot of spending to be allocated to Wi-Fi infrastructure, stuff like that, broadband infrastructure in that bill. So Ryan, what do you have here?
Mine's Amplify. So this is their connected home Wi-Fi system. So they do sell some just consumer facing Wi-Fi systems, not only on the hardware front, but also on the software. So, I mean, if remote work is a lasting trend, I think they have to find a way to go direct to the consumer, because let's say businesses go completely remote, they're probably not going to be paying up for reconfiguration or installation of an really comprehensive.
But some of that
internet
spending might go out to people's homes because they might need better security, stuff like that.
Yeah, potentially that as well. So just focusing on the home Wi-Fi kind of thing. And I think they're probably going to do that. But the thing that shocks me is that enterprise revenue did so well this year. I think it was up 36%.
It was a bit puzzling, yeah.
It didn't make any sense to me. And they don't really break it out. And they don't have a conference call, so I didn't have the answers to why that happened. But
if anyone knows, let us know. It's a bit of a black box over there. It's a black box that has done well, but you don't have much access into what they're thinking of currently. I'll hit my future growth opportunity. It is Wi-Fi 6. This is the next level of Wi-Fi. I have no idea what the difference is between 6 and 5. I assume it's some sort of frequency. But every upgrade cycle within the, any of Ubiquiti's market segments gives them this opportunity to win customers from Cisco. So it's going to be a slow process over time. And as Ryan mentioned, the incentives to switch from your current network are huge. And I guess that's the Cisco investment thesis from like the 90s and stuff like that. And that's why it's been one of the best performing stocks of all time. But if Ubiquiti is going to win, they're going to have to steal market share here. It's not like this is a blue ocean new market opportunity that they're building themselves. They really have to be better than the current players in there. And it's a large opportunity, but it's going to be slow over time. All right. Highlights and lowlights. Ian, what do you like and not like about Ubiquiti?
Well, I just thought of one more highlight that I hadn't thought about before, but it's a little bit of a pushback against your last point, that there may be some blue ocean strategy available here with international markets. And we keep hearing about just how much the rest of the world and Latin America and Africa and some of these countries are going to have this rapid internet growth in their populations. And like we've said, this whole thing, there's not a whole lot of information on Ubiquiti, so I'm not sure what their strategy is relative to international or how much they sell internationally. I may be able to get a number on that by the end of the show.
They broke it out in the 10K. I forget the percentages of geographic distribution, but it was not just North America. Ryan, you had a number. They're in 200 countries.
They've sold devices in 200 countries. Yeah.
Okay.
Yeah, I was trying to remember because I remembered seeing that number somewhere, but I couldn't remember what it was. So I'll get that by the end of the show. But so that's one potential highlight, is just the growth in the internet market across the world. But a couple more highlights. It's almost a 20 bagger since IPO. A lot of that's been in the last 2 years, but it was still like a 4 or a 5 bagger, maybe a 6 bagger before the last 2 years. So pretty impressive returns, and just gives you a little bit more faith in the management team since we don't have a lot of say in the business. And then it also recently had its best year-over-year revenue growth rate since 2014, and that was the number reported in late 2020. So they've been like, the business has gotten rejuvenated a little bit, and I don't, like we were talking, we're not sure exactly why that is. And maybe maybe someone would tell us and it would make sense to us, but we don't have a lot of info there. And that leads into my low light, is it's just hard to find a lot of info, which can both be a good thing and a bad thing. But then in addition to that, we're entirely dependent on the CEO, which also has not been a bad thing recently. But it's things to keep in mind. We're always at the mercy of management teams when we're investing in public equities, but in this case, it's even more so, right? There's really no investor recourse for any outcomes, and that's been okay for the last 10 years, but something to keep in mind if you're looking to invest in this one.
Yeah, or if Para decides, I'm going to retire, we've done well for the last 20 years, that's a risk. There's a definite key man risk with investing in Ubiquiti. Ryan, do you want to do your highlights and lowlights?
Yeah, that kind of leads into what would have been a potential low light, which is I'm not typically a fan of CEOs who own like sports teams or have some huge outside affiliation that's like diverting a lot of their attention. But he's been in that business for almost 10 years now, and it hasn't seemed to have any bearings on the business or on Ubiquiti at all.
At least they didn't name a stadium. That's the big red flag.
Yeah, I guess that's usually worse. But other lowlights is it's a really competitive market, especially in the enterprise configuration stuff, and you are kind of susceptible to reseller relationships or reseller favoritism to other stuff. Highlights, they've had exceptional execution and they run a really tight ship, and Robert Perrin seems to be doing all the right things. I don't like the lack of information. That's something that frustrates me, and maybe it's kind of Google-esque, you could say, but I prefer to see a lot of information.
Yeah, I don't know. There's pros and cons, because for one, if there's so much information out there, you kind of think that the stock is just going to be way more efficient. But then if there's companies like, you'd probably argue back in the 80s, and it might be the exception to the rule, that Berkshire Hathaway probably wasn't giving much information. It had an extremely complicated ownership structure. There's family members on the board, and you're like, what's going on here, guys? Like, give us some info. You're writing one letter a year starting in the 80s. But there are some points here you're kind of left out of any of their strategic plans.
Yeah, there's not even letters. It's just
just earnings released in 10K. Yeah, and there's no like, all right, we're moving into this market next year. This is where we're making a lot of headwinds or headway. Stuff like that.
Well, what about you?
Highlights. Same as you guys. I think Robert Para could be like described as an outsider. If you know that book, the modern outsiders could probably be like Bezos, potentially Daniel Ek. Robert Para, I think, probably lines up there too. I love their buyback history, their track record with buybacks. It shows that they're not just, and this is a problem with a ton of companies, just buying it no matter what. They're doing it very, very
methodically.
Yeah. They actually have a strategy with it, and it seems like they have an investment mindset with it. And a lot of companies honestly buy high, sell low on themselves, and don't buy back stock. So I love that too. I also like how they have a plan of having a culture with just a ton of operational efficiencies, and then attacking the market with low cost solutions that will work just as well as Cisco's. But with Cisco, you could argue there's a lot of bloat. They probably have thousands and thousands of employees, way more than Ubiquiti, and their pricing is a lot higher. So that is something that it's tough for Cisco to kind of like come down to where Ubiquiti's at. And that kind of leads into what I was going to have for competitive advantages. You'd argue that Cisco would probably have a competitive advantage. Like Ryan mentioned earlier, there's a lot of lock-in with this stuff, and there's economies of scale, and there's high switching costs. But Ubiquiti seems like a prime candidate for the, innovator's dilemma, where if they can execute, if they have a better value proposition than Cisco, it's going to be tough for Cisco to disrupt themselves and then get to Ubiquiti's level. But that's tough. It's a tough market, and it's not like Cisco's doing bad.
Okay, best case, worst case. This is our first time doing this. Ian, you want to start?
Yep. So my best case, and you're going to get into what leads to this, Ryan, but my best case is that they continue the significant buybacks like they've done over the past 4 years. They've bought back about 25% of their stock. And if they continue to pace similar to that, we should see free cash flow continue to increase. And there's a lot of potential for just a lot of big gains in the stock just by reducing the share count. And also, as we mentioned earlier, best case scenario looks like increasing the dividend and perhaps even to a more substantial level than 0.5% yield as it is today. The worst case, I think, is, and I think this is a in some ways actually a bull case for the stock, and it's a little too probably optimistic to call this the worst case, but I think that this is the type of business that has a floor, that it would be bought out by a PE firm or strategic buyer because of how much concentrated ownership there is and just the free cash flow that it generates. And even if this business were to decline or stop growing its revenue, that free cash flow with the huge margin it has should remain, and there should be someone who wants to buy this company. And like I said, I think that provides a little bit of floor on this company.
All right, Ryan, what are your thoughts? Bull case, bear case?
I mean, best case is they keep doing exactly what they're doing right now. They kind of skate where the puck is going. They have best in class products. Margins continue to expand incrementally, slowly, and then the top line continues to tick up. And the other thing that, and this is part of the bear case for me, is that they have, well, I mean, there are some short-term problems that they're going to have: rising commodity prices, any potential tariffs. They've talked about that as a risk.
Yeah, I would think those are going away, but that was something over the last few years. The old tariff bill.
Yeah, the problem would be, I don't know if I'll get this at a crazy multiple, because it seems like the kind of business where, you know how Buffett liked to keep Berkshire close to his estimate of intrinsic value, and if it dropped below, he'd go in and buy it. That's basically what they've installed here, where if it drops to something they consider below intrinsic value, they're going to buy it. So there might not be as many times where it's a screaming buy.
Yeah, I'm looking at historical EV to free cash flow. We're looking at 11, 31, 20, 15, 37. I mean, it's a little lumpy. 20, 46, 27. You know, I guess their free cash flow is a little bit lumpy, but because they have a lot of working capital stuff. But yeah, I mean, like you're saying, this hasn't been trading at like 10 times earnings or anything like that.
I'm not sure there's a huge scary worst case scenario here. They already have the lock-in with a lot of customers that enjoy the products. I can't imagine that there's a lot they could do to ruin that.
Yeah, I mean, that is the bull case, is to keep doing what they're doing, but you have to, I think, assume a high rate of revenue growth, because I think if you're being honest with yourself, this is something that probably deserves to trade at, around a market multiple. Well, I don't know what people think that would be,
above.
But you got kind of, maybe if they're best in class, a little bit of above. So with the current free cash flow multiple, it's slightly high, but you gotta, I think, assume that they're going to grow revenue at a high rate. Yeah, maybe they'll be able to juice it with buybacks, but I think one of the lowlights here, or I guess it's different than low light, or worst case scenarios, is that the valuation just continues to stay high, which may not make sense, but you don't have the opportunity to buy back your stock with a good rate of return. Last year, they were probably able to buy it back at, I don't know, a lot lower of an relative to their intrinsic value. I think another part of the bear case could be so when there's a lot of stories out there about, people in China, in Asia, and in Africa, and I guess Latin America too, not really going the Western route with internet and going straight to mobile. Now, I know they probably have equipment that they're selling to the people that are building out these, 3G, 4G, or 5G networks, but that might, say the super optimistic bull case on 5G works out, there might not be the need for at-home Wi-Fi. That could be a lot of years out, but that's some sort of terminal risk that they'd have as well.
Yeah,
I don't know. This one is different because it's not as volatile. It seems so consistent that it seems like a high floor, but what you're worrying about investing here is okay, what kind of rate of return can I get here? Is it going to be better than the market at this multiple over the next decade or something like that? Ian, you have anything else?
Yeah, I was just going to add, as you were talking about international, I promised some numbers. So North America, this is geographic revenue numbers. North America accounted for 45% of revenue. Europe, the Middle East, and Africa accounted for 40% of revenue. And I have to imagine that the vast majority of that was Europe. Asia Pacific accounted for 9% of revenue, and South America only accounted for 6% of revenue. So potentially some opportunities, caveated with what Brett was just saying, in those emerging markets.
Yeah, and you can't just bank. I don't think you can just bank on them just continuing to take market share from Cisco. You're not going to just underwrite, all right, they're going to get all of Cisco's revenue of whatever it is, $50 billion a year, but that is a large opportunity for them to go after, and it could help them grow revenue at a double-digit rate for a long, long time.
Yeah. Well, and you never know where the technology is going to go either, and whether there's going to be a new company that comes along and starts, someone else in their garage starts a new company and starts taking a piece of the pie as well. So not something I think to be super concerned about, but I think that probably because the rest of the business is so steady, that's one of the risks to consider is their technology ever going to become obsolete, less important and obsolete? Yeah. Like obsolete's a strong word, but trending towards obsolete, is that ever going to happen? Because I think that's one of the things you have to kind of come to terms with investing in this company.
Yeah. With businesses that are high tech like this, that definitely is a risk. All right, let's wrap things up. More or less interested. Ian, you go first.
As I was kind of alluding to in that last point, I'm less interested, not because I think it's a bad business, but I think I don't know where this business is going. I don't understand the tech well enough. I hate even dealing with Wi-Fi on my own. And so I don't understand it well enough. It's kind of in my too hard pile, and the business, not because the business is super difficult to understand, but just the tech and the secular trends. I don't know where it's going. Where
the industry is going. Yeah, that makes sense. Ryan, you're nodding. I assume it's similar.
Same for me. I'll make it quick. I'm less interested. It goes in the too hard pile for the same reason Ian just mentioned, not because the business model's difficult to understand, but you don't know what the future looks like. Is there some crazy event that could happen that could make the tech obsolete? I don't know. And then also, what does competition look like? I'm not super up to date on the industry at large.
Yeah, that'll make sense. I would push back slightly and say the tech obsolete thing seems very, very low probability, but I mean, it's something to consider.
I would generally agree with you. I don't think it's kind of weird with this business because it seems so steady. And so that may be the most concerning thing about the business to me, but on most business, it would be it's a very low level of concern relatively. You know what I mean? Does that make sense?
Yeah. All right. I'm more interested. I'll make the argument I don't think it's a hard business to understand, guys, compared to a lot of the other stuff. I know it is a hurdle. I don't understand it that well, but I think it's something that is, you put in some work. It's not biotech. I think it's understandable. But right now the valuation is high. It's not crazy. I love management. I love the lean structure that they're running. I just think that sets up a culture to want to achieve high profitability, to run a lean operation, to keep costs low. And they're able to be the low cost provider and have 33% free cash flow margins. There's something to say about that. I mean, yeah, I'm definitely more interested in this, but there would be some more things to learn about. You'd have to look at management. You really, without any of their disclosures, you're really making a bet on management. I don't know him well enough right now. And yeah, it really comes down to valuation and stuff like that. There's not many fat pitches in this market. Maybe there's no fat pitches in this market right now. This is definitely not a fat pitch at all. All right, we have stock for next week, and that is Ryan's turn. So Ryan, what do you got for us?
Global E-Online. They are some sort of e-commerce player recommended by Brian Ferroli. Not recommended, but he mentioned it to me. So got to take a look at that.
Nice. Is it a new IPO, something like that? Brian's checking it out.
I believe so, yeah. Recent to the public markets.
All right. Well, that should be fun. SaaS company, I'm thinking. Maybe.
I'm not sure. I really
I'm not
don't know.
sure. All right. Well, that's going to do it for this episode then. Thank you all for listening. I guess this is coming out. Never mind. We should have mentioned that at the beginning of the show that this is pre-recorded by like 2 or 3 weeks. But remember, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I are general partners at Arch Capital. Arch Capital clients may hold securities discussed in this podcast. Again, thank you all for listening. We'll see you next week.